Hello everyone and welcome to another technical analysis webinar with Trevor Neil. Thank you all for joining us. As always, we'll aim to get through everything in approximately 30 minutes. If you have any questions for Trevor, you can ask them in the questions tab of your GoToWebinar control panel, and I'll pass those on to him. We remind you that this webinar will be posted to our YouTube channel in a few hours or so time. So if you'd like to watch it again, you can do so there. And we'd love it if you'd also subscribe to our channel and click on the bell to get notified. Today's handouts can be downloaded from the handouts tab of your GoToWebinar control panel. If you're having any problems locating or downloading them, please just let me know in the questions tab and I'll send you a link. The first is a guide to the different technical terms and indicators that Trevor uses during the webinar. And the second is a CFD guide, which details all the different products we offer at FX Choice. If you're watching this on YouTube, these handouts will be available in the description box. Please click show more and you'll be able to see them. At the end of today's webinar, there'll be a short survey where you'll be able to get the chance to tell us how to improve our webinar and your webinar. Please take a couple of minutes to fill it in, and I know some of you have already filled it in, but for those of you who haven't, please do let us know what you think. For those of you who don't know Trevor, he has over 40 years experience as a technical analyst and trader and was a global head of technical analysis at Bloomberg. So Trevor, without further ado, over to you.
Okay, morning everybody, and thank you Dan for the introduction. And yes, please, I'd like to encourage you, any questions you have as we go along, any things that you would like me to cover that I'm missing, please send down a message in the chat box. I'm really glad to hear from you and really glad to cover anything that you're interested in from a technical point of view as we go along. But we will be going through the normal things, the majors against the dollar, the cryptos, the gold, precious metals, the crude oil, and also the stock indices for the majors. But any other than that, please, I'd be glad to cover it. We will have time. All right, well, the big story is, of course, the strength of the dollar, something that we've seen there. And we see this best in our relative rotation graph picture. Hopefully, Dan, you can see the RRG here now.
Yes.
Yeah. And let me just spread this out a bit so you can see the whole picture. For those of you that are new to the call, this is a graph we use to show the relative performance of currencies versus the dollar. So the dollar is in the crosshair here. Anything on the left-hand side of it, west of it, is weaker than the dollar. And then these are the samples. So here's the British pound, the end of last week, the week before, the day before, the day before that. So this is the move all through the week there. And you can see that it has moved further to the left during the week. In other words, weakened against the dollar, as has most of the currencies. On the other axis, the y-axis here, is the positive momentum. So things that were up in this quadrant here actually have positive momentum. In this quadrant up here, the leading quadrant, are outperforming with positive momentum. There's nothing in that quadrant. There's really hardly anything, which is just the Canadian dollar just entering the improving quadrant. So all things are weak and getting weaker is the message. The Norwegian crown is going in the wrong direction, if you like. It's heading southwest generally, so it's weakening and losing momentum in it. But it's the strongest of the set. But basically, if you want to be long of anything, you should be long of the dollar. Your choice of shorts, well, you've got everything else really, but the British pound is the worst. The New Zealand dollar here, the Australian dollar, the euro, all of those, and also unusually the Japanese yen as well. The Japanese yen is usually highly correlated with the US dollar, and so basically there's not much to choose between the US dollar and the Japanese yen. But here now the yen is also weak against the US dollar. Swiss franc had been leading this pack for a while, but it's beginning to improve a little bit here. So we've got the picture. The dollar's strong, currencies are mostly weak. Some of them are looking like they're going to get weaker. Now going back to the chart, let's start with the euro. Remember, the euro weak and looking very vulnerable indeed. In fact, it is looking very vulnerable indeed. To show you how vulnerable it's looking, let's go to the weekly chart. You remember I talked somewhat prematurely about this head and shoulders. left shoulder, head, right shoulder here. There's a big picture weekly chart. It's going back into the end of 2020 for this left shoulder here. Neckline here, break of the neckline here. And, you know, we have broken. Now it's really tumbled. Okay, we broke kind of falsely, then came back, but now we've gone down and it's moved for real. The minimum price objective measured from the high to the neckline and then measured down here takes you down to 111. Yeah, I said that much hysterics on when I posted that on LinkedIn, but now less hysterics, hysterical response about that. It looks quite realistic. We pick up a lot of support, of course, at that point there, but the journey up here was very fast. So that means it's relatively easy, frictionless for the euro to move down here. So the MACD is negative, so that's you know, we are in this downtrend. On the daily chart now, we've broken through significant support here, which is now resistance, so here is 116.64, and it's, you know, it's very, very vulnerable indeed. Yes, we did have a little bit of easing off at the end of the week after the collapse at the beginning of last week, but it looks very much like a downtrend with an awful lot of resistance before. So I think this one, the major currency versus the dollar, is looking like it is going to remain weak and with much resistance above, making it difficult for it to rally. A similar picture in sterling. Sterling, not a head and shoulders, but a double top. We broke it and then rallied and then broke it again. But basically, it has the same sort of weak picture, but coming down into support more closely. So the picture is here that with the weekly MACD is negative. We've got resistance at 136. We've got support at 125.14. Here, right down here, but we've also got resistance at 135, support, sorry, on the daily chart, 135, 134.10 down here. But you know, there's a lot of resistance. These two resistance points in here are ahead of us. So any rally that's going on right now, I think, is going to find it difficult to progress. I think the direction is impulse reaction, and should run out of steam, I think, here and then start to turn down again. Very vulnerable pattern, although the big support is somewhat closer than it is on the euro. With regard to the Canadian dollar, that was of the commodity currencies was the one furthest over to the west. It's not really a strong message here, and so this is not my sort of favorite attractive market to participate in the dollar weakness. This is US dollar CAD, so this is the dollar rising and the Canadian dollar weakening. So it is weakening. We've got the rising lows pattern, rising highs pattern in here, and it's we've got resistance, dollar resistance of 129.38, and at also at 128 itself. We've got a sizable resistance just above 130 here, and you know, it looks ugly, that's for sure, but it's got quite a lot of dollar resistance coming up, and I'm not so sure that this is the one offering the best clear route without any resistance or support. The euro I'd prefer to see. Let's look at the Swiss franc, the one that led us all at the beginning, was the one that really became very weak against the US dollar. So here it is. So rising lows here in the US dollar. So this rise is strengthening of the dollar, weakening of the Swiss franc. We've got short-term weekly resistance at 93.68 and then at 94.72 on the daily chart. So rising up here, rising support levels here. This should, Swiss franc should continue to weaken, and although it's come up a bit in the RRG chart, I think this still looks poor and vulnerable to further falls in the Swiss franc, particularly if this high in the dollar gives way and we get through this 95 level, then I think we could go 2 cents quite quickly, up for the dollar, down for the Swissy. So yeah, you take your choice here, but basically it's buy dollar and sell something else is the tone of the market. Now that's, funnily enough, not filtered through, or the cryptocurrency didn't get that message. So let's look at the RRG of the cryptos now. Here's the US dollar here. All of them are west of the dollar, so they're all weaker than the dollar. But look at the direction of them. They're all heading northeast, and Bitcoin leading the way here. And this means that the positive momentum of relative performance is increasing, led by Bitcoin. So much improving picture, not outperforming the dollar, but looking much more likely to be the things which do outperform the dollar than the regular currencies, which are all down in here and facing in a southwesterly direction, getting worse, if you like. Here we're in the improving quadrant. So this is the place to take cover against the dollar, I think. So let's go with Bitcoin. Remember, that was the best looking one, in the one that was further east, still weaker than the dollar, but the further east of the group. So here we've come, this is the weekly chart of Bitcoin. The MACD has crossed, it is positive. They got the rising lows pattern here. We've got stiff resistance just above 52, 52,948, and then we've got resistance up here at 60,000 there. But we've got, we're close to a breakout point here, and the technicals are looking much improved. So here I take great comfort from the fact that we've managed to hold above this resistance here at 48,800 area. That's supportive for us now. Lots of other support levels below, and the resistance is quite light at 52,948. So not a big challenge if the market wants to go up. The technicals, the RSI and the MACD are much improved here. So I think this one, can be, compared to any of the other regular currencies. If you want to have something to buy against the dollar, then probably it's, funny enough, Bitcoin. Not so true of Ethereum, and less true also of Litecoin. Ethereum has got more resistance above it than Bitcoin has, but if it can clear the resistance at 3,000, refusing to show me the highs and lows, 3,680, then we can have a clear shot at these important highs here at 3,900, let's call it 4,000 here. So the area between there is quite clear, but this is we're still below it here, whereas the Bitcoin is much closer to the break point. It's supported here at 3,200, right down to 2,700 in here. It's quite a good looking chart, but I think the Bitcoin is a better looking chart. Litecoin, not quite so good at all, not so good at all. Here we've got heavy resistance above us, centered on 180, which is, and it is heavy, and it's likely to make it very difficult for Litecoin. So I would expect, if we do get the improvement in the cryptos, then I think Litecoin will lag in that movement, and Bitcoin will lead in that movement. Moving now to the precious metals. The first thing I want to look at is the silver-gold ratio. Here we go. Here it is. Here. So silver, I should say correctly, the gold-silver ratio. So rising here, as we are doing, oscillating up, higher lows going on here, is gold outperforming silver. You see it's come back over the last few days, but down to a support level. I would expect the gold to start to get more of a impulse than silver very shortly, but neither of them are looking terribly good. The gold, lower highs intact here, lower lows intact. It has held and made a very important level at 1720. We've got the spike low down here at 1684. So we've got some lows in place, but an awful lot of resistance. Very hard for this to move up at the moment. It meets resistance after resistance. So we've got resistance. The next resistance that it will, if it goes up, will tackle will be 1786, and then lots of resistance, really lots and lots of resistance around 1800. Yes, if we clear 1830, then then it can really run up. But that is a very heavy, cloudy sky above us there. But looking at the silver is here's the weekly chart of the silver. It's looking very dangerous indeed. We've got the lower highs pattern in here. We're testing, well, these weak support levels here are being tested just above $21, say 21.25, that area there. If they break, look, there's just nothing below it until we get right down to below $19 there. I think this is quite vulnerable. So the gold-silver ratio improving might be the result of silver collapsing on its own and just gold staying where it is, not really gold going up at all. This is a very worrying chart. Gold's heady looking, but this is really quite vulnerable to a severe sell-off chart. Moving to Brent crude oil. Brent crude oil has been our favorite for a while. We've been watching it. It is steady, but there's so much potential in this market on the upside. It is struggling with some old highs back from July and from 2018. These are resistance levels, but it's pushing ahead pretty well, and I think it's getting, it's going to keep on plowing ahead. The weekly chart here, I'm going to bring in a bit more data in here to show you the last time we were here. So we broke this very good downtrend line here, revisited it from the downside, real classic chart behavior, break the line, retest it, move up as we are doing. We've got light resistance from 2018, around 85 level there, and then it's a clear shot to about 105. I think. So, we've done fantastically since the low in 2020 and when it went negative and everything like that, but it still looks as though it's got more to go on the down and the upside. So I'm still remaining very bullish of this, and any dips, are opportunities as far as I can see. And at the moment, what we're seeing in the short term is, a little bit of a pause, and the fact these pauses are so brief is a sign of strength in the market. Any comments before we go on to the stock indices?
Trevor, I'm afraid that we've got another audio problem today, so I'm afraid we probably won't be having any questions, but we can continue just for the YouTube video.
Okay, all right then. The US 500, it's coming down, and it's coming down when in the middle of August we talked about the seasonality in this market, and I said within the next 2 weeks we have this seasonally weak period. Now let me show you that. Hopefully I can bring this up pretty quickly for you, the seasonal chart and the seasonal chart updated, because we're approaching now the weakest point seasonally for the market. So here it is. And I'm hoping, Dan, that you can see.
Yes, we're looking.
Yeah. So this is an updated version of the chart which I showed you initially back in August. And here is the red line is the US 500, and you can see that we've been going down. We've been going down. We've got two lines here for the seasonality. We've got the average over since 2009. Till now, 1990 till till last year, and that's the average. And then we've got the grey line is the same, but excluding the global financial crisis, because that was an extreme outlier, extreme weakness, and made this black line so deep. So maybe, you know, unless you think there's another year like that on the way, it's good to take it out and just average the other years since 2009. And you can see that in both cases, we're coming into the lowest point, the dip. So the time of year when a low is made. And you'll also see that what follows is a strong up move. And so from that period onwards, we usually get the strongest move of the year in the US stock market is then. And that is coming up now. It's actually the third week of October. I just warn you not to be, you know, too flushed with success with the call at the top of the market, because we should give ourselves a pat on the back for that. You know, we did say it, and it has happened, and it's a serious thing. It's a serious weakness we got in the market, and now it's forecast to come to an end quite soon. But seasonality is a very difficult thing. I would wait until you see the market bottoming before you conclude the bottom is in place. You know, it could happen a week later. And that's very, you know, it's really a very imprecise thing, a sort of 3-week period, really. And we could be a lot lower in a week's time, couldn't we? And so don't be too obsessed that it is the third week precisely. It is around about the third week. It could be now, for example, or it could be a bit late this year. But on average, it's around the third week. And you see it's quite a strong message there. So watch out for that. But in particular, I don't think you will need to hurry, because that last period, November and December, is so rampantly strong. And almost every year, this has been not only really strong, but the strongest period of the year itself. So look forward to that. Okay, going back now to the chart. So here we've had the weakness, it came in on time, and we're coming into a period where it should start to strengthen sometime around now. We've had one day up, that's not strengthening yet. It's come back to this low here at 4,300. It's held above so far the low of 4,233, which is the higher low pattern, which defines the uptrend of the market. It is weak. It could get weaker, but it should be heading in towards a low, I think. In the Tech 100, we've got the same pattern here. It's broken. It's broken the equivalent low, which the US 500 had not done, a 14,821. It has broken that. It is also testing this low here, the July low. Very important that that holds 14,455, because that's the defining low of the rising lows pattern. That will be very destructive for the bull case if that low gives way. It's all looking weak, but I will say again, looking like heading into a bottom sometime soon, but it could be lower than we are now. The UK 100, horror. We've not liked it ever, and we never like it because of this. I'll show you on the weekly, and then going back, we come into a 4-year consolidation area, which is all resistance. That's above us. The market has stalled all of this year, really, and it's going to continue like that. It's really hard for the UK 100 to go up, and so you can find individual stocks, yes, but if you want an index, this is not where you should be looking. It is vulnerable. Any weakness anywhere else will be magnified here. And also, now we must call it, of course, what it is, the DE40, now 40 constituents in it, and that's looking quite toppy, isn't it? So here's the weekly chart in it, high, higher, high, and now easing off. The weekly MACD is negative here, and then on the daily chart it looks pretty heavy. It's lower highs and lower lows pattern in place. We are holding at the moment this low here of 15 019. If that gives way, then I think we're on our way down there. And you see that July low has been broken here. That's a very important level to have been broken. So that July low has been broken. If we break this low here, that would be extremely destructive for the market and would infer a big fall down to that low, by the way, is 14,816, would infer a move down to about 13,700, something like that. So this is looking very iffy indeed, the German market. All right, Dan, there we've come to the end. And,
Trevor, yeah, thank you so much, Trevor. I'm really sorry. It seems like we have had another problem with the audio. We'll have to see if we can get this addressed because it's driving me crazy. So thank you very much, Trevor, and thank you everyone who attended. And thank you if you're watching this on YouTube. Please join us again next week, same time, same place, and don't forget to post this webinar to our YouTube channel in a few hours or so time so you can watch it there. Do you have anything else to add, Trevor?
No, I haven't. I mean, the themes are strong at the moment. The dollar strength is dominates not only the currencies but also the commodities as well. The dollar-based commodities like gold and Brent crude oil. Stock markets, we've got that strong seasonal pattern. Very good that we picked that up early, but let's not spoil it by getting it wrong at the end and being over precise there. The low in place could be, in a period of weeks from now, and it could be a lot lower than potentially than we are now before the low is in place. So just be careful with that one. Okay, well, thanks very much for hosting, Dan, and I look forward to talking to you again next week or on YouTube. Thanks very much indeed.
See you soon. Bye-bye.
Bye-bye. Thanks.